All right. Well, greetings, market rebels. Welcome to this week's macro measure. I'm Wayne, and my partner Ryan's working on the market outlook for the week, which will be coming out a little bit later. It's November 6th, 2022, a little bit in front of noon here on the East Coast. Going to get us moving on our trustee disclaimer and also get us moving on our trustee intellectual property rights notice. And I'll let that sit up there a little bit. And I think that ought to do it. So first thing I'd like to take care of, which I've been thinking about, is the fact that last week, where's my basic chart? Last week we were talking about probably needed to back off in the markets, mainly because things were overbought in the short run. Some of those intraday time frames were pretty high on RSI. So that did happen on Monday and happened a little bit more on Tuesday, looking at the QQQ here. And of course, the Qs really got hit hard by the end of the week overall. And that really was what we were thinking in terms of take a little of the steam out of it early and then see what happens with the Fed and then see how the market reacts to it. And that's the words that were spoken. I don't think that really supported the latest yarn that was spun in terms of, hey, the Fed could pivot. And by the end of the week, it kind of got rough again. And really the same thing happened here as we're looking at the SPY. And we'll get into all these quickly, but I'm going to try to make this as quick and kind of organic as possible without a lot of prep, because we're going to try to shorten these things up and try to change them up. It's just a request that we keep receiving over and over again. So we're going to have to try to respond to it. But before we get into the charts, I just wanted to backtrack briefly into just the reminder. That's not it. Where is it? Oh, it's over here. All right. And the reminder is, right, that we are now into November. And just in case you were wondering, but more importantly, what happens in the S&P with the S&P in the midterm election year seasonal pattern since 1946. And here's all years, and things usually start out pretty solidly all years, kind of peak a little bit mid-month, back up, and then finish strongly into really early to middle December. That pretty much holds somewhat similarly, but different for other ways of viewing the data. First midterm, right? All midterms, all years, etc. So yeah, you can check it. You can check this out. It's in Market Outlook last week. But the reason I'm bringing that up is we're supposed to be in a good part of the year, right? For bulls, that is. And so they've got that. So the so-called seasonality or seasonal tailwinds working in their favor. We all know that the market participants like to do what they can to make themselves look good. And it's put very simply, and that's not something that I think is lost on people. We see the end of quarter window dressing, end of year window dressing. We see how there's this sometimes a manic run into year end to the upside. But I also wanted to note this, and this is really the story of the week that is coming up, unfortunately. I could save you time if you don't want to watch the video and just note that I shared this on Cocktail Hour, right? We've got key economic reports coming out in the form of the CPI, but we also have the midterm elections, obviously. And what happens there, I really don't know. Right there, we've had more problems in the last 20 years or so, 20 plus years than I can remember before that. In terms of elections and irregularities and issues and all kinds of things. So it's become a mess. And I don't know if the market, how the market will respond, because I don't know what these outcomes will be. I don't know if there will be a big uproar. I don't know if the market rallied because they like gridlock and now they're going to sell on news. So let's just take a look at that. If we look at the big name stocks, the diamonds, for example, right, leading up to this, thinkorswim shifted on me. All right. So leading up to this, here's the diamonds, and this has been a heck of a run, right? And even just about, I guess you'd call it 3 weeks prior to the where we get to the election. So it's been a heck of a run in some of the biggest name stocks, despite a lot of the big tech stocks that are heavyweights in some of these indices dragging things down. And you all know what I mean: Apple, Microsoft, Google, Meta, Amazon, things like that. So this has really been a different story in the blue chip stocks to this point. Here's the view of the whole year, really, that we've been charting this way with this sort of expanding channel. And we almost made it up to where the line, I think the line should be at this point up in here, and I'll make that blue. And you're right near the 200 there in purple. So you got above there, you drop back through all the way down through to the 150 there in rust colored, and now you're trying to go back up as per Friday. So I don't know what to think about that, but I think we're in a situation where right, I would still lean overall long-term bearish, but I think we have to look at a couple other things that are really not typically macro measure discussions. They're more suited for sector situation, which I'll be doing shortly. But I think we have to dive into those to get a sense on what's going on here, because I don't think it's as easily read or clear cut. And this is really a difference maker here. And what that leads to, of course, Dow Jones Industrial Average would be looking at the XLI. And the XLI, that sector, the industrials, looks obviously very similar. And it looks pretty good, actually, right? Like that actually, on a lot of the stuff I do that's bigger picture, a little bit longer term cyclically, this is acting pretty darn well. And you have to scratch your head a little bit like, well, what's going on there? Because things really seem to be getting hurt in so many other places. What about basic materials that sort of feeds into XLI and things like that? Kind of another big macro thing. And look at those, right? They're not looking so bad. Those actually are starting to look good on some of the things I like to look at, other cyclical things. So this is telling me that, wait a minute, we don't want to go too deep into the sectors here, but this is really interesting that these big things that really seem like, okay, they're sensitive to economic trends and current status, things like that. And here we have XLE, which can be, again, this can be independent, but if there's strong demand for basic materials because those stocks are rallying, and maybe there is, I don't know. It sort of surprises me. But what if there's strong demand there? There's strong demand for energy, and there's strong demand for industrials, right? And things like that. That's really interesting that we're seeing that. Now, I don't know if it's positioning in front of maybe what folks are expecting to be a bounce back year, early positioning, and they think 2023, somehow this is all going to sort itself out very quickly and we're going to be off to the races. I also don't know if, right, the run that we've seen, let's just use again diamonds for that, if that turns into, hey, well, this was a big run expecting gridlock, we got gridlock and now it becomes sell on news, or is it, hey, we have gridlock and we can try to use that, spin that to justify trying to make this year not look nearly as bad as it's looked and felt for the most part. I don't know. I just don't know. And I'm not going to sit here and say, this is how it's all going to shake out. I think with so many things sort of balancing themselves out, I see a lot of cyclical stuff where stuff that is pretty sensitive to what's happening in the economy. Maybe it's China coming back online, but last I checked prior to recording, I did not see that China had backed off. Maybe I missed it, but I hadn't seen that China backed off in a big way, and that zero COVID or COVID zero policy was retired or put in but was mothballed at this point. So I'm really not sure what to think there. Overall, right, we can still say objectively that the trend is down. We could still say that this has had a big run, and that if the diamonds, we'll chart the diamonds since we're here, if they had a nice pullback, and now if they reclaim the 200, right, and they get up through here and high, this is the key thing they have to take out, right? They've got to take out this resistance line there that I'll make blue. And then, right, they have to come back and attack this. And if they start putting those behind them, then we can maybe start believing it more. I feel as though I'm more of a long-term bear. I still have a hard time believing that should happen. I do believe strongly that it could happen because I've seen far too many rabbits pulled out of far too many hats. And I've seen reality really pushed to the side in my career so many times that it's hard for me to rule out really almost anything, because I've seen the shenanigans. And even something like this that seems crazy, right? It seems crazy. And all I'm trying to share really with this video today, since I'm very undecided, and I'm going to go back to that Tudor Jones quote, but bottom line is there's a gap even all the way back here that's unfilled. And I would not even rule that out, that these guys are able to string something together. I don't think it should happen. I don't even think it will happen. I just don't want anyone to get complacent on upside risk, because with everything so really in such a poor state, right? In such a poor state, with all the well-known issues that are out there, and so many even big names acting really poorly. There's so many people that I think would have a hard time, just as I would, believing that this should really happen, that the market should really melt up or scream higher, whatever you want to say. But I wouldn't rule that out, because so many people I don't think are not prepared for that. And I'm not making that call. I don't think that's going to happen, but don't get steamrolled, right? If you're a bear, like probably a lot of us are, Ryan, myself, AJ is obviously a bearish, big time and stuff like that. Market Rebellion. I mean, John and Pete have been trading, I think, that way as well. I just wouldn't want to see someone get steamrolled. So if the price action starts to overtake things and it's not making sense, just remember that the plumbing inside the markets might favor that kind of a thing, in the sense that it's causing a lot of pain for people. I would imagine that a lot of folks are very underweight where they normally are, looking to be smart about things. And if they get caught underweight and these guys somehow ignite a lasting rally, it could force the hand of a lot of these people that have to really then start jumping in, because they are missing out on probably manic upside performance. When it comes to SPY, they are clearly lagging behind. The SPY is clearly lagging behind. If we look at it, here's the big picture for the year. Nowhere near the 200 the way the Dow is, nowhere near the upside resistance. So this has, if the Dow's the leader, which I don't know, there's a lot of catch-up potential there. But what I'm trying to get to, and let's be very clear about this, if it lets me, for some reason, there we go. We try to expand on this. I think what we should do this week is wait to see what happens with the elections and what happens with CPI, knowing that even after Thursday morning, when the information comes out, we have really 2 full days to trade this week, right? And we'll have the whole balance of November and the whole balance of December for the year. So even if they start something, a big sell-off or another leg down, or some kind of manic hyper madness type rally to the upside, you'll still have time to get on board and get involved and probably do well. So I would look to lows being taken out, and I would look to highs being taken out. And right now, we basically, this big move that they started making in front of the election that I talked about, again, I don't know if it's the pre-gridlock run, get gridlock, you sell off on news, or they just decide, no, this is an end of year start, right, to make things look better, and we're going to use the gridlock to celebrate and try to justify a jam higher. And you all know, I've seen all the comments in Rebel Pit and elsewhere about Fin TV and how they're effectively just cheerleaders. We all pretty much, anyone that's been around, I think, knows that they're just going to cheerlead their way, bring on the parade of people that never see a cloud in the sky. It's been that way since as long as I can remember. But anyway, I would just look to levels, right? I would let the market tell you what to do and react to it, because there's enough that I've seen on both sides that I think we have no idea what's going to happen with the election, right? We have no idea. There's people talking Republican supermajority at this point because of some polling data and late shifts and early voting returns and so on and so forth. I couldn't tell you. I really don't trust anything that comes out of most sources. I trust very little. Is what better way to put it. So I think you have to do that, because as I said, I don't think you can act as if things like this, right, with energy and industrials and basic materials actually all looking good. That, wait, why is that happening? Right? There are obviously sector specific, specific reasons for that, and there's all, especially right in energy, and there always are. But there's more. There could be more to it than that as well. And so this is really close to taking out highs, right? And that would be, now that to me is not good. That's more inflationary, right? And it really cuts into folks' pockets, which they really can't afford right now. If you look at a lot of the stuff that Ryan's put in Market Outlook for us, right, with respect to how consumers are tapping their credit for necessities. I don't want to go too far afield, but you get the idea. XLI, just to review this again, right? This is acting pretty well. It's back above its 200-day. Again, I'm not predicting anything. I'm just saying, let's just take note of these things and not act as if this stuff may not matter. It may not matter, but I have to give it some due, right? I have to give it its due right now that you double bottomed. You had higher RSI readings on the second low. They've been jamming this thing up. They've got it back above in XLB. They've got it back above the 100, right? It closed strongly on Friday. Right. And it definitely could continue to work its way up. So if you look at the chart, that doesn't look so bad right now. And neither do the other ones if they can break out and start making new highs. And so if it depends to me this week depends on how they spin this. Let's jump over to the QQQ. If it lets me. And we will take a look at the QQQ. And this is a little different story. And a lot of you know that, Apple, some of these things still look pretty bad to me. But again, let's be objective here. If they could take the news, let's say you have a little bit of weakness on Monday morning, and then they start working on supporting the market above or near this low in the QQQ, and then they get the news they want, right? You'll have another situation where you effectively had a retest of this low. They had higher RSI with some positive divergence working in there. And they'll then try to go with it. Now, of course, that's what I would look at. If this gives way and the overall reaction is risk off and they're selling everything, totally different story. But this is what I would wait for. I just don't think we know how this could play out. If there's going to be a lot of consternation, if it's going to be a lot cleaner because they fixed some of the election problems that were supposedly out there, don't know. There's a lot of just don't know stuff. And again, I think not forcing trades when there's a lot of uncertainty is generally a smart move, generally. So I don't like this. I mean, you could see the trend of the year. You could see that resistance line that I've got there that's on pretty much every major index ETF chart. Again, it's there in blue. You see the SMAs are all trending lower. You can see this is not acting well. I mean, I wouldn't like this. Without these catalysts and this end of the year seasonality, I'd be more inclined to think that this is definitely going to break down and that the move we're seeing in XLE, XLI, XLB, all that stuff it's a false dawn, right? And that there's more to go. But I have to be much more prudent right in front of what happens here with the election. And then CPI, I think it's Thursday morning. And that, of course, is going to be big on the heels of last week's Fed situation. So we're not out of the woods. I can't wait until CPI is out and this election is done as well, so we can start to trade more true to the charts and not have all these news items that can be utilized by the powers that be to jerk stock prices around in noisy, less predictable ways without sustained trending. The sustained trending is where all of our swing trades really work out much better. Last week, we had a very rough week in the market, especially in the Qs, as we can see there. The Qs had a really rough week, and the TNT name of the week was Amazon. Of course, that's highly correlated overall to the major index ETFs and had its own problems. And again, you get the market wind at your back on something that's acting poorly, and you can do very well. Last week's TNT trade was probably one of the best ones in a while for the main focal name. Other names, the bonus names weren't, I don't think, anything special, but sometimes they are, and the main focal name gets bottled up due to news or something. But the point is, you can do very well if you have the market's wind at your back and your stock is participating and acting somewhat even with more, with more alpha. So that's the divergence there. But going back, this just doesn't look good. Could you say that some of these things are getting oversold? Yeah, I think you could, right? I mean, I think it's safe to say that you're on your way to oversoldness in some of the big tech names, and also in the Qs and so on and so forth. But look, I think you're in that middle part where I don't think you should be forcing a decision here. I think you're better off waiting, seeing what the reaction is. I don't think my take on it would be if the election really plays out in a way that hurts stocks and stocks start rolling over, unless they really massage the CPI number, I don't think the CPI number will be strong enough, even if it's supposedly bullish, because it came in a little bit lighter. I don't think that will be enough to completely reverse things unless we get super oversold prior to the numbers release. That would be my way to look at it. So let's take a look at IWM as well, and we'll get that going. IWM is acting a little bit better as well. So you can see the trouble is really in big tech more than any other place. And that's also another interesting sign that players are willing to come in here, and they're willing to it seems like become bulls in here a little more enthusiastically than they are in the Qs. And this is small business, and you would say, well, they don't have the balance sheet. They're not as deeply pocketed. What's going on there? But it's kind of reminding me a little bit of, well, that's kind of like the XLE, XLI, XLB situation. Like, I don't want to ignore that, right? I still think it's stuck in a downtrend. I don't think it gets out of it. I think there's a lot of really bad stuff yet to come, but I would still do this, right? I would look at the 20-day there in blue, which is really the low from Thursday. If that starts rolling over and we see risk off, I'd go with that. Certainly would be willing to go with that. Look at the trend, right? Look what's been going on. By the same token, if these operators manage to spin things and you get near this high here, which is about 186, we'll just call it to make it easy, that's right near where the 200 is already. The 200 is right near there in purple. So if they get it through there, right, you've got to give it a little bit of respect and say, hey, well, the way they're spinning this thing, somehow they're managing to pull this off, and there could be another leg to the upside too. There it could be that they bring this thing back all the way back to here. Of course, I don't know. We just don't know. But I just think a lot of this is going to be, I think, just trade for singles and doubles early in the week until you get through at least right into Wednesday and see what happens with the elections. And then from there, I would be more inclined to see how, if you see a lot of the sectors, which I'll cover in sector situation, you see a lot of the sectors also struggling, and like especially the leading sectors we just talked about. I didn't talk about XAU, but that's definitely its own thing. We'll talk about that in sector situation. But the main three I just talked about, if they continue to perform, great. But if they don't, and mostly everything else is being sold off, and that might be the end of that little attempt, right, for whatever drove that, which I can't really say for sure. But I'm still more of a longer term bear when I look at the cycles on things. But I have to admit that with a little bit of shenanigans, right, I think with a little bit of shenanigans, they could get this thing going. And if you just try to be objective about it, right, this looks to me more like a head and shoulders for me. You look at back over here, not a perfect head and shoulders, not textbook, but this would be the head, and then you have another shoulder forming. And that's what that looks like to me. But at the same time, you have a double bottom here, you have improved RSI readings down here, and you're working your way through the 50, the 100, you work your way up to the 200. If they get that thing turned around here, then you are on your way towards, right, you didn't make it all the way to the lower side of this expanding channel. And that's the first sort of sign, I think, along with this double bottom, that you've got some hints of strength showing up. And again, seasonally, this is about the right time. We'd expect this to happen, just about. And that's telling me that, again, another sort of small sign, the potential for the shenanigans that would make very little sense to most of us when we look at the economy, that they're there. The potential for those is there, and it's even in the charts if you ask me. So I'm just imploring folks to be prudent and not force their hand. Everybody wants, every technician that tries to help out there to make this grand call. And I don't think I've always thought that's really not the way to go, because you've heard me say this if you've seen watch these videos, but I'm from the school of, if you keep your ego out of this, the better off you are, the more you keep your ego out. And if you do a lot of analysis and spend a lot of time and come up with this really emphatic decision, right, that you're going to ballyhoo, I wouldn't, I think that's counterproductive. I think it's going to keep you from adjusting aggressively and being nimble, because it's really hard when you get deeply bought in on something and think that you put, your intellectual firepower on the line, and this is what should happen. It kind of gets you away from the action, just trading the action. And in swing trading, what we do in the short run with most of the market rebellion services that Ryan, Greg, and myself try to co-manage or edit, we don't believe in that. We believe in being nimble, because you can get, you can be crushed, right, if it's not a strongly trending market, if you refuse to be nimble. But I would treat this as, look, gets below here, but again, the 20 gets above that 200, and the whole market's really working at that point, which it probably would be, then go with it. If the whole market's failing, then go with it. But I don't think you're in a spot just yet to get super aggressive in front of these two big items this week. And I think after this week, it will open up for you. So I think you have to be cognizant of that. A couple of things we've looked at, and I'm going to start to wrap up here, is IYR. Now we've looked at this. This is hanging out with a higher low, and it did put in a higher high above this high. Oh, I'm sorry. I thought it did. Visually, I thought it did when I looked at it a little bit earlier. Might be wrong on that. 85.13 versus 85.20. So it may have double top there. But you can see this maybe has an inverted head and shoulders. Here's the left shoulder, the head, right? And then the right shoulder may be forming. And so again, I'm sort of like to look at patterns. They're not really my main thing, but they're worth a look if you ask me. And if that thing does take out that neckline, which will probably be the 50 or effectively these highs, that could really ignite a pretty strong move back up as well. But as of right now, right, you're seeing a little bit of improvement. I'd still call it more of a corrective action, right, against the trend than I'd still lean the other way with what I believe about what's happening out there. But again, I would still let the charts tell you what to do and where to be, and instead of trying to jump the gun at this point. This is kind of no man's land. So I don't have a strong anything on that right there. I mean, I would just do the same darn thing. Here's your low to trade against, here's your high to trade against, and see what the market's doing. If it's risk on, risk off. There's just no reason to. I'm planning on putting a lot of ideas out there in UOA Pro for folks on both sides of the action this week. That is my goal. And it looks like I'm having a little trouble for some reason here. Let me shut something down to see if maybe that'll help out. I have a new install here with Thinkorswim, and I wonder if it's giving me a little trouble for some reason. Not Thinkorswim, a new install, Windows 11. Okay, it did kind of get hung up a little bit there. It's a little bit delayed. Let's see if I can just get back here and wrap things up. Probably should wrap things up so that we don't have a problem if it lets me, but I'll give it a second. But a lot of these things that we typically look at, I might not be able to check out, like the dollar, which I think is still correcting. And I think that's getting near an interesting point that we'll have to keep an eye on. It almost looks like it's going to be correcting a little bit more, and then it's going to come into, I think, a big support area. And then we have to see what happens there. I kind of know that from memory. Let's see if this does this now. Let me see if I can at least jump over to the dollar. So if I look at this, it's gotten, right, this is going to be big if it gets down here. Let's try to look at it right here, right? If it comes into here where we have our support line, that's pretty big. If you want to say, well, I'd rather wait for the low, but if it cracks, certainly, right, if it cracks here, then this trend that we've got in place it's a big deal. If it cracks here, right, if it cracks a little bit higher on our support line, okay, not good. But certainly I think if it cracks here, then it's you're in real trouble. And right now, like this is a daily chart on the DXY. This is coming off, right? Coming off a lot. It's gotten really long-term overbought. So big picture overbought. So I think, right, just keep an eye on that area. You may want to just kind of keep an eye on that 109.50-ish. And if that's a big area, if there's problems, right, if for the dollar and it starts to roll back over further. But it looks like they're going to bring it back in a little bit as it stands now. HYG, I'll chart that really quickly. HYG has a similar to what we're seeing right in the LQD and so on and so forth. But I would, again, I'm sticking with this. I'm sticking with it. This is some still corrective activity. I still think, right, all your SMAs are still negatively sloping. I would say, look, what I would do here is if this go with the trend, again, risk off. This is getting taken out, go with it. If it looks like they're risk on and they're putting some spin together and it looks like there's a squeeze maybe on the way to a melt up, take out that 100 right there. Again, I'd be willing to go with it from there. That's the way I would personally look at that, just on a basic level. Let's take a look at the VIX because everyone likes to look at this, and then we'll kind of wrap up here. But if you've been looking at these videos for a while, you know that these lines have just about been there for a very long time. We haven't had to really move them around all that much. And this looks, again, another thing that tells me that it's vulnerable, right? Because if they start losing this middle area where it's supported at times when it threatened to do it, didn't do it there. But when it plunges below the mid 20, let's call it the 24 area, it's come down harder. It's come down towards the lower part, this other support line in the high teens. So I would be on the lookout for that. They've been working it down. It hasn't been acting well. It's now below all the SMAs. If you want to look at it that way, I don't chart the VIX the same way I do a stock. It's definitely cyclical and mean reverting. But it seems like to me, right, there's almost like a lack of interest right now, which is a little surprising, but it's vulnerable. And again, that's another thing, just a little item there to say, okay, well, maybe this isn't going to be like the big rollover. I mean, all of us have been thinking there's got to be this flush, because we're used to seeing a flush at the end, but we haven't really seen the flush this year. But we keep trying to rally, fail, and come back and roll back over again, right? And we just haven't gotten out of that all that much. So this is their best chance to do that. I'm trying to think if there's anything else that I wanted to look at. And I do know there was one last thing, which I'll talk about in sector situation too, but yeah, the semis are, despite what the Qs are doing, the semis, which are a leader, right, at times for sure, they're not acting as badly. It's another little item there that's not acting as badly. And so, again, this is why I would let the market tell you there's just too many conflicting things between the things we've looked at this week and the cyclical nature of things and how some of the time frames that are bigger picture are shaping up bullishly, while other ones aren't quite in sync with it. There's a lot of stuff that argues in both directions. If I had to make a decision and I had to force a trade on, I would probably still lean long-term. I'm a long-term bear at this point, so I'd probably just have to say in the end, you've got to go with the bigger picture trends. I would still do that, but I don't think there's any reason to force anything until you see how they react and how they spin, and if they can sustain anything. If they can sustain anything, especially on the bull side, if they can start to do that, and the news is somehow it actually allows them to do that, there's a lot of folks that are ill positioned that they could force to essentially become participants. So, and you'll know the scramble will probably be epic, so that would be my way of looking at it. But in the end, I'm still at this juncture more of a long-term bear. And if I had to decide on what to do at this very moment, I would wait for this stuff to start to roll over. From, if anything that's rallying, I'd wait for it to roll over. And I would be more inclined to be a bear without knowing how Tuesday will play out and how CPI will play out. So kind of a long-winded way to say be safe, right? And just wait for the market to reveal itself to you. But we have to go through all that to arrive at that conclusion. And in my experience, whenever I've had a hard time deciding what to do, it's been almost always a good call. In other words, like your apprehension, because you can't see enough clarity the way that you view things, usually leads to the market arriving at a similar conclusion. So I don't know if that'll be the case this time, but I would say far more times than not, when I've decided to sit on my hands, it's been the right decision. And far more times than not, when I decided to force a trade, it's been a poor decision. So I just want to make that little share there at the end. And I want to wish everyone a very safe and prosperous week in the market ahead. And thanks for tuning in. No, it's fighting with me to end it.